Look, as me and you have talked about a lot, like it's all about putting the data points together. And you come out of that call, I'd actually say incrementally more bullish, not even just on NVIDIA, but on the overall AI theme. Because of the Blackwell delays, if there was going to be one, what I view headwind or black cloud, they put that to rest in terms of yields and any of the issues there. Demand's outstripping supply anywhere from 10 to 15 to 1.
Right.
So when I look at the underlying enterprise demand, not just in big tech, but even like when you look at sovereign and you look at what I think ultimately is going to be the rest of sort of enterprise, this is a story I still view, call it bottom of the first, top of the second inning. I continue to view it. It's LeBron in high school and Akron.
So you really do still believe it's that early?
We're only 3%, maybe 5% tops of enterprises globally have even gone down this path.
Right.
So it comes down to like when, sometimes I think like it's very easy, like not see forest through the trees, like in terms of like, okay, October quarter, 32.5 billion, whispers 33 billion. But now the focus is more like, this is a company ultimately going toward 50, 75 billion, eventually 100 billion per quarter.
Yeah.
And I think that, to me, is really the trend, not just for NVIDIA, but for what this means for the rest of tech.
In the electrifying world of semiconductors, some stories stand out like a bright comet in a star-filled sky. The latest quarterly results from Taiwan's Semiconductor Manufacturing Company Limited have sparked a buzz within financial circles, particularly due to the unexpected revenue surge that sets a fever pitch for AI-driven markets. Providing chips to tech giants like Nvidia Corp and Apple Inc., TSMC's recent numbers are more than just remarkable. They hint at a seismic shift in industry dynamics, particularly driven by cutting-edge processor node technologies. What's brewing behind these stellar figures that have analysts in a delightful tizzy? Could this be the dawn of a new era for semiconductor stocks, potentially reshaping investor priorities? Let's not lay all our cards on the table just yet. There's much to unfold in this fascinating narrative where silicon meets innovation. Welcome back, everyone, to Investocracy.
Shares of Nvidia climbing today, recovering from yesterday's broader chip sell-off on the heels of a disappointing earnings leak from ASML. That stock still sinking today. Nvidia also getting hit with news that the DOJ is considering capping AI chip exports to some countries. Joining me now to discuss all this is Bernstein Research's Stacey Rasgon. Stacey, it's good to have you here. It always sounds like there's a ton going on around Nvidia, and certainly there is. Not to mention we have, Jensen is really, on the circuit out there, kind of preaching the future at every turn as well. And yet the stocks, it's up 0.7% this week. It's kind of hanging in there onto this gain. So separate out what matters and what might not for this one.
Yeah, you bet. So yesterday took a hit along with the rest of the sector on two things. One was the ASML earnings leak, which was interesting in its own right, and some of the export control news. I think any hit that it took on the ASML report was probably not really justified because, while ASML's report, as we all know now, was not great, the one sort of bright spot from it was AI demand. It seems like AI demand is still off the charts. It's about the only thing that is, but it's still very strong, and clearly like that benefits NVIDIA. I do wonder if some of the hit yesterday was more around some of the export control stuff, and what's going on there is there were some stories that suggest the U.S. is considering, I guess they suggested capping the licenses that NVIDIA and other AI chip vendors can use to sell parts to other countries, particularly, I guess, in this case, the Middle East. I'd say, and though I'm not sure it's that big of a deal, I guess we'll see, but caps, in my opinion, are not bans. They already have they're already under licensing arrangements with the Middle East. They have to get licenses to ship there anyways. And frankly, the other outright bans that we've seen in the past haven't really slowed them down at all. And so I'm not terribly worried about that. They seem to be more incremental than anything else. And we saw the stock yesterday was coming down before the ASML. They dropped sharply and then kind of recovered a little bit afterwards. And so I think today it's kind of relaxing a little bit as it's clear that the ASML news is not a direct read across, and maybe the export control stuff isn't as big of a deal as people might have been worried at first.
Yeah, and the market clearly, as you suggest, making its peace with whatever all this is. And I know there's a way also of saying, listen, this stock is where it traded 4 months ago. It had an absolutely massive run. It gets to $3.3 trillion market cap. And then maybe it needs to kind of hang out for a little while and figure out exactly how long we're going to be in this lucky position of demand outracing supply into next year. So where do you think that sits in terms of investor expectations and how the stock is positioned?
Yeah, it's interesting. You sort of look at the last couple of months, it was in a lot of news flow. The stock took a big hit several months ago on the Blackwell delay rumors. And while it does seem that there were some issues there, it really looks like they've worked through without any problems, right? So it didn't really have any impact on the demand trajectory. And I'd say since the stock I went to $90 or something like close to it, and so it certainly recovered off of that. I guess that was a great entry point in hindsight. And look, going forward, I mean, all of the checks on AI demand, like I said, they're going to sell everything that they can make. And you mentioned Jensen's out there. I think he's been on your channel more than once in recent weeks and sounding very enthusiastic. It's the one bright spot in the whole semiconductor arena right now. It's the one thing where we can definitively point and say demand is probably going to exceed expectations, even expectations that I think are going up now. Some of the other areas in semis, I wish you could say that. You can't really say that right now.
For sure.
From the bustling semiconductor capital of Hsinchu, TSMC has rolled out numbers that left jaws dropping across the financial world. An impressive NT $759.69 billion in revenue for the third quarter, showcasing a year-over-year increase of 39%. For a company already esteemed as the powerhouse behind Nvidia and Apple's critical hardware, this is like setting a high-score record in an arcade game, only with billions at stake. The demand surge came predominantly from smartphone and AI markets, with TSMC's cutting-edge 3-nanometer and 5-nanometer technologies proving to be the secret sauce. It's as if the technology gods themselves decided to sprinkle a little extra magic on their processors, and the impact was immediate. Wendell Huang, the senior vice president and chief financial officer, highlighted this success as a testament to their strategic focus on advanced technologies. When a company generates $23.50 billion in one quarter, it certainly appears they're doing more than just assembling silicon wafers. They're catalyzing revolutions. Now, humor me for a moment. What's the difference between a stock market wizard and a stray cat? Absolutely nothing if you ask an underperforming stock option trader. Yet, amid today's volatile market, TSMC has proven itself to be more wizardly than whimsical. The financial metrics lent credence to an exceptional performance, marked by a net income and earnings per share spike of 54.2% each. The takeaway: investors aren't merely dancing with the stocks, they are investing with a vision. The market clamor for high-performance computing versus demand, surges from AI and smartphone applications pointed to a momentum that buoyed TSMC to even guide higher than consensus for the next quarter. A narrative that couldn't have been written better unless penned by a best-selling author of investment successes. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
So I want to quote you. This was the opening paragraph of your post-earnings research note. NVIDIA's earnings last night was front and center globally as the godfather of AI, Jensen, are the torchbearers of this AI revolution. The tech stalwart delivered massive, quote, drop the mic numbers yet again that easily beat the street with a top line that grew 122% from a year ago quarter, with $30 billion of revenue and a robust outlook for the October quarter of $32.5 billion, 80% growth. While some buy-side whisper expectations were a tad higher for the October quarter, we believe NVIDIA's surging AI chip demand, Blackwell delay concerns allayed, robust outlook, and a meteoric enterprise pipeline speaks to this AI revolution just starting to kick off its next phase of growth. I think a lot of people had that reaction, but the stock price didn't. What do you think is the main reason for why we saw NVIDIA sell off almost 6 or 7% in the immediate aftermath of that report?
I just think it's like people expect Djokovic to win 6-0, 6-0, 6-0.
Yeah.
If it's 6.3, oh, lost 3. So the point is like you're expecting like, okay, could they give a 34 billion number? Just another. It was basically what I view as call it, $500 million higher than sort of base, maybe a little below Whisper. I think it ends up probably being closer to 34 billion number. Because I think now NVIDIA recognizes when you're in this parabolic growth, especially with Blackwell, there's no reason for them to give a 34 billion, even though I think that's ultimately where it goes.
As we segue into NVIDIA, another titan in the circle, it's clear the investors have had an eye or two sharply focused on it too. With a whisper of an ear to market walls, our insider mystery archetype spotted 303 unusual options trades for NVIDIA surface recently, hinting at large-scale moves brewing under the radar. Was it a telltale sign or merely astute financial chess play? Almost better than binge-watching a thriller series, these options were like shadows on Wall Street, pointing fingers without explaining. The trade patterns revealed a significant leaning towards bullish sentiments, 51% bullish to be exact, with heavy wagering and calls over puts. NVIDIA's journey through AI landscapes with its GPUs and innovative platforms like CUDA for AI model deployment has kept them climbing industry ladders, branching out into data center dynamics too. Clearly, NVIDIA is navigating these complex market landscapes like a pro gamer, unlocking levels on a console, each step strategically mapped for future growth. And what about those mysterious trades, you ask? As one tweet humorously put it, seems like someone's buying NVIDIA call options like they're buying candy on Halloween. Professional investors often see what the average eye might miss: a subtle change in volume and open interest. That's either the sound of someone quietly preparing to make a move or a very expensive joke at the expense of those not paying attention. The confluence of NVIDIA and TSMC in this buzzing market narrative attributes to more than just numbers and profits. It's about riding the next wave of technological possibilities that AI brings. The growth projected in NVIDIA's trading horizon, analyzed through the lens of volume and interest trends, is but a mirror reflecting the larger movements in semiconductor reliance and tech-forward shifts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I love your chart inside the rack, right? So inside the rack, you break it down for everyone, what's in, and then outside the rack, manufacturing equipment. This is ASML. KLL 10 cores there, Lam Research, and of course, applied materials. Those stocks crushed. I mean, absolutely hammered yesterday and today. I guess this is an area you would stay away from anyway.
That's right, Charles. So I think if you want to benefit from the data center investment cycle, you want to stick inside the rack. And
inside the rack.
Exactly. And some tangential plays on the energy side, because this is where processors are a big area,
right.
Networking is a big area. So those are really the areas where money is spent today. Over time, if you look over the next 10 years, we will need more equipment as well.
But not right now.
But not right now.
All right, so of course we're talking NVIDIA inside the rack. I'm a little curious about AMD. Down 9% in the last 5 days, the worst performer in technology. Is something going on there? Because it feels like there's a constant tug of war between AMD and NVIDIA. Are they catching up? Will they be able to compete?
So people were a little bit disappointed by their AI event, where they didn't really reveal any new data points. But I would point to people, the stronger Blackwell orders are, and the CEO made a comment that now Blackwell is sold out.
Right.
The stronger they are, the better the setup for AMD. So the setup here is pretty favorable. There are some question marks, though, around whether you can get the same utilization from their chip as you would from the Blackwell, because it comes with a lot of free libraries.
So speaking of Blackwell orders, they're coming in big time, right? I mean, you see the same names that the hyperscalers are there, the Microsofts of the world, and they're buying. And so you're confident about the Blackwell. You're still confident about NVIDIA. You did. I want to switch gears because we're going to run out of time, but I saw.
The story of Taiwan Semiconductor and NVIDIA in the stock market today weaves a story of not just calculated risks, but also seasoned judgments. It's not just numbers climbing charts, but a testament to how technological evolutions command changes in investment landscapes. If history is any indication, this might be the perfect momentum to join in the rally. TSMC's stock, marked by the sheer force of AI-driven progress, climbed over 82% this year. Hard to ignore, isn't it? For Nvidia, the current market positioning and options trading dynamics suggest a balancing act of optimism tethered to market speculation. Sitting at $133.22, with its RSI flirting with the boundary of being potentially overbought, Nvidia continues to intrigue traders with promising earnings on the horizon set roughly a month from now. Now it's your turn to step onto the trading floor, armed with insights and perhaps a touch of enthusiasm about what these remarkable shifts might mean for your portfolio. Do these tech titans deserve a spot in your investment book? As we close the chapter on today's Stock Chronicles, we ask, what's your take? We would love to hear your insights. Share them in the comments below. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.